Hey G Money Junkies, I'm back. It's been a long time since I created my last video, but you know what, with all the Wall Street bets and the GameStop hoopla that's been going on in the last month, I thought, you know what better time to restart my channel and actually get people to learn how to invest and not gamble. Today we're going to talk about the Wall Street Bets GameStop saga. And I'm going to explain what short selling is and how this stock went from $5, $10 to a high of $400 and some odd dollars. So let's get started. I'm here to help you to understand what happened and how not to get caught up in what basically was a loss for a lot of people, but a lot of gain for a lot of people. But what I'm going to do is go through this little presentation and whiteboard some explanations on what shorting is, how you get into a short squeeze, and what a massive short squeeze is, and what happened here with GameStop. Now, I pulled this from the Bloomberg article. There's been a rebellion in the stock market, in case you haven't noticed. The battle of GameStop, the stampede of the meme stocks, which basically is AMC, BlackBerry, Nokia, and the rage against Robinhood were as transfixing as the bursting of the dot-com bubble. Yeah, but maybe not. But only this time the action was focused on a handful of companies associated with the 1990s culture, and this time everything was going up. Thanks to traders talking it up on social media, the stock of GameStop Corp, the unprofitable mall retailer of video games, climbed as much as 1,745% from the start of the year. Goodness, I'd love to see what the annual return on that is, because that's just in 3 weeks. The AMC movie theater chain peaked at a gain of 839%. BlackBerry and Nokia, which once made very popular phones, people strapped to their belts, spiked 279% and 68% respectively, and cost the headphone maker Build-A-Bear Workshop Tootsie Roll, for some reason, silver shot up as well. So what happened here was that a lot of these professional hedge fund managers and money managers were shorting these stocks, and we'll get into what shorting is here in a little bit. And then the retail investors, they're the ones who are basically investing from home, their own money, they don't have any licenses. They banded together, and what they tried to do was buy these stocks up and raise the price so that the ones who were shorting it would lose a lot of money. So a lot of these stock prices shot up, and this was the effects of a short squeeze. And a short squeeze occurs when a stock or other asset jumps sharply higher because a lot of people are buying now. And the ones who had sold actually had to buy the stock to cover their short. The stock price continued to go up because there was a lot of demand to get the stock and not a lot of demand to sell it anymore. So let's talk about shorting a stock. All right, so now what we're going to do is we're going to talk about what it means to short a stock. So let's say you have a person who owns a share of GameStop, and we're going to color him green because he's long and he owns a share. And then now you're going to have an investor who hates the stock. He thinks GameStop is going to go out of business because you have the likes of Steam and Epic, and you can buy games online. You don't need to buy physical discs anymore. He's going to be a shorter, so I'm going to color him red, and he's going to be short GameStop. So he never bought the shares. And let's say GameStop is trading at $10 a share right now. Usually when you buy a share, let's say you buy at $5 and you want to sell at $10 so you can make a $5 profit, but he never bought it. But he thinks GameStop is going to go down and he's not going to be at $10 anymore, but it's going to be at $5 again. So what he's going to do is he wants to go short. So he's going to ask the broker, let's say Robinhood is the broker. Many of you guys might have downloaded the app already and are trading on there. And what he's going to do, he's going to ask Robinhood to borrow the shares. So this share is going to temporarily be in the short's possession. And what he's going to do with the shares, he's going to sell it. So he's going to sell to someone else who's also long. So we'll call this guy long too. So now this guy actually owns a share. And this guy over here also owns the share. Now the shorter has $10 in his pocket. This guy bought the shares for $5 and it went up. And then this guy bought the share for $10. Now this guy owes a share. So I'm going to put a negative. What is a short squeeze? We'll talk about that now. Let's say the share price goes up. That is now the new share price, $15. And this guy, the short, only has $3 in his bank account. Well, the broker, Robinhood, is going to come to him and say, look, you don't have enough money because you're now $5 at a loss and you only have $3 in your account. So what we need to do is we need to close out your position and ask him to contribute another $2. So now the short is now forced to buy back the shares at 15, but in order to do that, he needs to drop another $2 into his account. So now he has $5 of money plus the 10. So now he buys it back for 15. And then he repays this guy with the share. So now this guy over here made $5 because he sold it for 15. This guy is now up to $15, so he has a $10 profit. And this guy here now has a $5 loss. So that is what a short is. Now, what does it mean to have a short squeeze? Well, we're going to include many shorters in this scenario, modify it a little bit, and all these guys are now trying to buy shares of GameStop. They're competing with each other because they don't want to lose too much money. So let's say they all shorted at 10. The current price is 15, so they're at a $5 loss right now. And each of them say they don't want to lose any more money. So this guy says, well, I'll buy it for 16. I'm okay with losing another $1. And this guy says, no, I need that share. So he'll raise it up to 17. And then the third guy will say, well, you know what? I'll take a little bigger loss, but I don't want to continue losing, so I'll buy it for 20. And meanwhile, you have actual longs in here who are coming in buying the stock. And they say, you know what? We think this price is going up to 30. So we're okay with buying it for 25. And then these guys over here are saying, okay, I tried to bid these prices, but now it's at 25. They get more desperate, and this guy will say 26, and this guy will say no, 27, and then this guy will say 28. And so what's happening to the price of the stock is that it's going up and up and up and up because these guys owe shares to some of these longs out here, and they need to repay those shares, especially if the broker closes out their account. The broker will buy the shares at market price and not just have a limit price, but they might buy it at any price available. Now, I talked about the longs that jump in and actually help bid the price up so that the shorters are unable to find shares at a reasonable price to buy back and repay those shares. So what happened is on this forum called WallstreetBets, it's on Reddit, and I've been on this forum for a good 5 years now. And these guys are a ragtag group of investors that are out there, and not all of them have the idea of investing, but a lot of them, as is the name, have the idea of betting. So what they want to do is actually find a stock where they can make a ton of money really quick, or they can lose a ton of money really quick. So that's what these guys are. Now, I go there for entertainment value because it's funny reading their posts and how they don't like some professional investors out there like Melvin Capital or Andrew Left. I find it very interesting. Sometimes you find great ideas like GameStop. I don't believe it's a company that is going to be like Blockbuster. I think they have a lot of cash that they can deploy and have a virtual presence out there like Steam, like Epic. Now, they'll be late to the game, but I think they can pivot. I do also believe the new Xbox and PlayStation, they still have a physical disk drive in it. And so people are still going to be buying physical games, and they're going to go to a retailer like GameStop to buy those games. Now, when you buy and download a game, you're pretty much buying it at full price. But when you go to GameStop, you can buy that same game for $5, $10, $15 instead of $60. And you can also trade in your games, which you cannot do online. You buy a game for $60 and there's no getting rid of it. I think there will still be a market for video games. And that's what these guys on WallstreetBets were talking about. Now, there is a WallstreetBets user. His name is Deep Effing Value, who bought shares and call options in June 2019 when GameStop was $5 a share. Now, hold on to that price because that is a very low price, and we're going to see how far up this price has gone. What I found interesting was that the call options were expiring when? January 2021. So that makes me wonder a little bit. I'm not exactly sure what that means, but he was up at the edge of his call options expiring, but he got it when it was fine. By January, it was up in the 30s. So I think he was fine, but he was more fine eventually. Now, if you don't know who Michael Burry is, go watch the movie The Big Short. And this guy basically bought puts on the housing market in the mid-2000s. He made a ton of money for his investors. Now, he also believes in GameStop, and a lot of his theories were what I shared earlier about the physical discs and that there will still be a market for GameStop, but that they can also pivot to have an online presence. And so he bought 1.7 million shares for a value of $17 million. And that value was as of September 2020. So I believe he probably got in around $5 a share, but as of September, his value was $10 a share, or 17 million. So he probably doubled his money as of September. If you look at the WallstreetBets history and you look for Cohen GameStop, you're going to see posts going back into last year, 2020, long before the short squeeze or the big short squeeze happened. And he was the founder of Chewy.com, which was an online presence for pet supplies. He had been buying up GameStop shares because he had the same thesis. In January of 2021, he was added to the board because he had so much equity in GameStop. So he has a deep expertise in e-commerce. And the thinking here is that GameStop will now shift towards an online virtual presence as well as a physical retail store. So the Wall Street bettors were really excited about this because they had been talking about this since December. Now, if you look at here, I have a screenshot of this, but this is basically some of the threads that they had over the holidays, and then catches fire. And there's more and more chatter on this forum as Cohen joins the board in January. And now we're going to look at some of these threads here, which are really interesting. But these came out in early January. But if you scroll down even further, and these came out in December. So if you look at the short interest, really interesting that they were discussing this way back when. And even down here, it's time for shorts to give up. December 21st, long before the big short squeeze happened. Ryan Cohen is going to do a hostile takeover at GameStop. And this was December 21st. Why it's time for shorts to give up. This is December 21st. Short interest update. So they're watching what hedge funds like Melvin Capital are doing and how much they've shorted. And then they're talking about, and I love their terminology, but going to the moon with the rocket ship. And so they have a lot of data here where they have a thesis that there would be a massive short squeeze, and not only can the Wall Street Bets people buy the stock, but they can force the hedge funds to buy the stock and cover their shorts. So why Cohen is vital to a GameStop success story? Well, basically here's a thesis of why this guy is going to help GameStop become an online retailer. And here's a Forbes article that they basically use to reinforce that thesis. And then actually GameStop comes out with a press release to talk about the board refreshment to accelerate what? A transformation. So what they want to do is advance the refreshment of the board of directors, and they have deep expertise in e-commerce, online marketing, finance, and strategic planning. And these skill sets will support the company's continued focus on optimizing core operations and creating a powerful and exciting ecosystem for games and entertainment. So they're not talking about expanding retail necessarily, but creating an ecosystem, basically like a Steam or an Epic. Here's more analysis of how Melvin Capital is dangerously short, and this is right after Cohen's appointment to the board. More analysis, and they've got them figured out. Late January, where the short squeeze is underway and it's massive, and I believe at this point, so we had gone from, this is January 12th. $19.95 a share, and Melvin Capital is watching their losses rack up. So they probably shorted around $10 a share. Now they're at a loss of $30 a share on the 21st. They're at a loss of $55 a share on the 22nd. By the 25th, they're at a loss of around 66 a share. By the 26th, they're trying to buy those shares back. Their losses are getting higher and higher and higher and higher. Now, by the 26th, if they haven't bought back a lot of these shares, they're sitting at $130 loss per share. And they sold these shares at $10 a share. By the 27th, $347 a share. Well, Melvin Capital closes out. We didn't know what they had closed out at. Maybe it was at $150 a share, maybe $200 a share, maybe $100 a share, because everything went up pretty quickly. And CNBC could not confirm the amount of losses Melvin Capital took on the short position. They were precariously on the edge with these short positions at $10 a share. And then you basically watch the Wall Street Bets forum push them out. Now let's take a look at FinViz for GameStop. And every 15 days, the market releases basically how many shares are short of every stock. So right now you have 40% of the shares that are short. So basically about 25 million shares borrowed and sold short. But back in January, that number was actually around 140%. So what you're talking about, around 70 million shares short. Wait a minute, there's only 54 million shares available. how can you be that many shares short? So what I'm going to show you is how you can get over 100% short float interest. All right, so now we're going to go back to our original scenario. You have the long on this side and you have the short on this side. And the short borrows a stock and sells it. So let's say you have one share of the company that exists. So one share float, just to make it simple. You could put whatever number you want in here, 60 million, 1 million, whatever. But we're just going to talk about one share float. Now, you have one share short. So when you do the math, 1 divided by 1 times 100, you have 100% of the shares short. Simple, right? Now let's introduce another player. So this guy sold the share to someone who now owns a share. And then short trader number 2 borrows a share and sells it to another guy who now owns the share. So now you have one share of float and you have 2 shares that are short. You do the math here, 2 divided by 1 times 100. You are now 200% short. That's basically how you have a short float interest over 100%. So I hope this helped you to understand what exactly happened there and how GameStop went from $5 to $10 a share to a high of 300, even intraday high of 400 some odd a share. In the next video, I'm going to talk about the fallout, because it wasn't just the hedge funds that made or lost money, but there were a lot of retail investors who made a lot of money but lost a lot of money, including teenagers. We'll see you then.